What if I told you the money in your bank account isn't really there? Seriously, think about that for a second. If everyone woke up tomorrow morning and went to the bank to withdraw their money at the same time, the system would collapse within hours, because that money isn't actually there. And no, this isn't some conspiracy theory. This is literally how the system works. But the strangest part is this: we've been taught to see it as completely normal. Since the day we were born, we've lived inside this system. We get paid, tap our cards, look at numbers on a screen and call it money. But almost nobody stops and asks the real question: what are we actually living inside of? Today, I want to talk about that. Because the modern financial system is far more fragile than most people realize. For the system to keep working, you need to stay in debt. Now I want to take you back a few hundred years. Picture medieval Europe. Back then, money wasn't numbers on a screen. It was real. There was gold. There was silver. People literally carried their wealth in their hands. But there was one problem. It was dangerous. So people started leaving their gold with goldsmiths. Goldsmiths had secure vaults. And in return, people received a receipt. This person can come back and reclaim their gold. At first, everyone actually returned for their gold. But over time, things changed. That receipt was just as valuable as the gold itself, because people believed in it. And that's exactly where everything began. Goldsmiths realized something. People almost never came back for their gold at the same time. Most of the gold just stayed there untouched. And then, one of the biggest financial tricks was born. Goldsmiths started issuing receipts for gold they didn't even have. There were 1,000 coins in the vault, but they acted as if there were 2,000. And nobody noticed. It was built on trust. The moment people stopped believing, the game was over. But people kept believing. And that became the foundation of our banking system. Banks still do the exact same thing. You deposit $100, but the bank doesn't keep it sitting safely in a vault. It lends it out. The person receiving it deposits it into another bank, and that bank loans it out again. And the cycle repeats, again and again. Most of that money never physically existed. It was created as debt. Most of the numbers in your bank account aren't real money. They are somebody else's debt. New money only enters the system when someone borrows. For the system to survive, debt must grow forever. Modern economics is kind of like riding a bicycle. The second you stop pedaling, you fall. And most people don't even realize it. Banks used to hold real money in reserve. Today, in some countries, that number is basically zero. Yeah, zero. If an ordinary person did this, it would be called fraud. But when the financial system does it, it's called economics. Governments are deeply tied into this. Wars, crises, stimulus packages. A huge part of it is financed through debt. Money that hasn't been earned in the future is being spent today. And eventually, ordinary people pay the price through inflation. Why does everything keep getting more expensive? It's because new money keeps being added, and the more there is, the less it's worth. So technically, your money isn't growing. Its purchasing power is shrinking. Think about what that means for your future. That's why people today can work harder than ever and still feel poorer, because the race keeps speeding up. And do you know who benefits the most from this system? The people closest to the creation of debt. Banks, massive corporations, asset owners, because newly created money reaches them first. That's why even after economic crises, the rich often come out even richer, while ordinary people stay stuck in the same place. Do you remember the 2008 financial crisis? For years, people were handed mortgages they could never truly afford. Debt piled higher and higher, and the market was flooded with a fake sense of prosperity. Then suddenly, people stopped paying, and everyone realized something terrifying. There was no solid foundation underneath the system. The entire economy was built on confidence, And once confidence cracked, everything started collapsing. But did the system completely fail? No, because central banks printed trillions of dollars. So the solution became the same thing once again: more debt, more money, more expansion. Because the truth is, modern economies are now addicted to this system. The system doesn't really want you fully free. If everyone paid off all their debts, huge parts of the economy would stop. The money supply would shrink. Banks would stop lending. The economy would slow down. Which means you need to keep consuming. You need to keep borrowing. You need to keep working. You are not just someone living inside the system. You are the fuel that keeps it alive. This video isn't about fear. It's about awareness. People believe money equals wealth, but real wealth is different. Knowledge, skills, production, land, independence, real assets. Because the numbers on a screen can change overnight, but real value stays real. And history has shown us this over and over again. The goldsmiths of medieval Europe, the Great Depression of 1929, the mortgage crisis of 2008, different versions of the same story. Promises bigger than reality, and a system that works only as long as people keep believing in it. But once trust breaks, everything changes. So the next time you look at your bank account, remember this: the money sitting there may not be as real as you think. The system is built on trust. And throughout history, no system that lost trust survived forever. If this video gave you a different perspective, subscribe. History whispers what the future might become.